Okay, hello everyone, this is Miltos coming to you from London, recording for Futex Live. We're going through the weekly trading roadmap for the week starting the 19th of January 2015. So it's a pretty busy week this week, quite a few things to cover, so I'm going to try and keep this as short and sweet as possible. So just bear with me. I'm going to go through a few of the events this week, the event-driven risks that we're going to see, and some of the potential market opportunities that could arise from these events. So we just take a look real quick. Um, Monday, obviously, tomorrow is Martin Luther King Day. I'm not particularly expecting anything much tomorrow, very low volume. So really that has to do with just trading maybe a few technical setups, but nothing really you want to be putting too many of your chips down on. Tuesday, we start off with Chinese GDP. That's expected at 7%. There's probably a tolerance of about 0.2% on either side. Now, obviously, we've had some concern. The World Bank's come out and said that they're lowering their growth forecast for this year. And I think if some of the main markets that we could be looking at with regards to the Chinese GDP, obviously people are starting to worry about a bit of a hard landing in China. So the markets to look at are probably copper. So if we take a look at copper on this chart, this is a weekly chart of the copper. Obviously we've had a very significant decline, as you can see in here. We've been breaking outside of this pretty nice chart structure that we've been going through week by week. We broke through that $3 mark, and at the minute we've really closed the week just around this 2.65 handle. As you can see in here, we had a bit of a gap in here, a couple of lows. It seems like a nice little swing area. So really, this week's gonna the real indication of whether we can get a continuation in this market will be if we can hold, below here. And obviously, if the Chinese GDP does come in weaker than expected, and especially below 7%, we might actually see a bit of an offer and maybe a vacuum a little bit down into these, 240s, 238 levels. Definitely something to keep an eye on. Would be looking at that chart quite closely. Another market that could definitely be exposed to some movement is the Australian dollar. If we take a look at this chart, this is again a weekly chart. We saw a really nice big head and shoulders pattern. So we've already broken down below that head and shoulders pattern, and we've posted quite a bearish, some bearish patterns, some bearish candlesticks to the downside. So really, if we do get a worse GDP number out of China, we could see some continuation to this bearish price action. Sorry. On the contrary, we have posted two quite bullish candles. Not last week's, but the week before that was quite bullish. We seem like we're a little bit caught up in this little region right here. So if we do get a better Chinese GDP, possibly we could get a small little relief rally back up in here. That could possibly be sold off. We could find some selling pressure in these regions, possibly the 50% of this move, which should be between the 84 and 85 mark. But something definitely be keeping your eyes on with regards to that number. With regard to central bank policy, on Tuesday we've got the ECB survey of professional forecasters coming out. And obviously the ECB look at two measures of inflation that they make their core decisions on. It would be the five-year inflation swaps. So basically, it's a market-based indication of the medium-term inflation expectations. And then the ECB's survey of professional forecasters is another thing that they put in their index, so that they can basically make their decisions. Now, I don't think it's going to make a huge difference on their decision come Thursday on the 22nd. However, we might see a little bit of market moves, maybe if they're not as low as expected. Should be looking primarily 2015, 2016. They give the estimates. I'm not sure if they'll be giving an estimate on 2020. Just something possibly to keep your eyes on and your ears open for. It's something that the ECB does look at. So that is taking place on Tuesday. Not sure what time, but worth keeping an eye out for that. On Wednesday, the main data point is the UK ILO unemployment, and the 3-month expectation for that is at 6%. So obviously on Wednesday we also do have the BOE minutes, so this is going to definitely fit in well with that. I'll go through chart structure for the gilt. Just look a little bit at the market structure there. Obviously, we've seen on a daily formation, the market's been finding a lot of passive buying. So aggressive buying, passive structures in here, been breaking just higher and higher. We see the market as of this year has opened, quite strong. So we've had a quite an aggressive bid at the beginning of the year, as have all core fixed income markets. And on Friday, we actually closed a very bearish um, candlestick pattern. So we opened quite high with an inside day before that, and we actually closed quite a bearish structure at the minute. Now, whether this is going to actually confirm depends obviously on the data. So if let's say we do get worse than expected data, so a higher unemployment rate, we could see this market actually begin to find a bid, and it's not something that's impossible. We see on this day as well, the market did open quite a bit higher, closed bearishly, but then progressed higher. So there is a pretty strong sentiment in this market already keeping it bid. Um, on the contrary, if we do get quite a lower unemployment rate, it might go contrary to the bit of that negative sentiment we've got from inflation and some other figures. So that could provide a bit more impetus to this this kind of bearish candle. I would personally be looking for at least a close below these lows in here, 121.50. Something to keep an eye on the gilt market. FTSE 100, if we take a look really quickly, the market's been kind of swinging around. This is a daily chart. We saw this particular weakness as oil was coming off about a month ago. We're seeing now kind of consolidating in this little range. We've broken outside of this bit of a trend line, so would be expecting possibly a bit of continuation here if we do get some slightly better numbers out of the ILO unemployment. Maybe we could see a slight bigger bid in here. Obviously, the major risk being on Thursday with the ECB. I think markets are primarily looking at that, but that could definitely affect it. On Wednesday, we also have the BOJ monetary policy statement. Obviously, the BOJ recently acted on the 31st of August on Halloween, so it's quite close by now. I mean, it's not. They haven't had a bit of space to actually see the results of what they've done. We have obviously had a lot of falling energy prices, so that could prompt the BOJ to curb its near-term forecast for inflation. Recent comments from the Kuroda suggest that the board will retain its current policy, and they could possibly, hold this wait-and-see approach for 2015, being as the Japanese cabinet are waiting to approve this 3.5 trillion yen fiscal stimulus, which obviously will encourage some growth. So something to keep your eyes on. Now, obviously, if they do act, it would be a surprise. So if we took a look at the market that's most relevant to this, would be the dollar yen. So if we take a look at this market real quickly. If I just shrink this up a little bit for you guys, you can maybe take a look. This is a very, very long-term, if you look on a monthly chart, very long-term resistance trend line. And at the minute, if I zoom just right back in for that, you can see we're actually consolidating just under. We've had a bit of dollar weakness and yen strength in the recent weeks. So the last 2 weeks have a little bit um, of a pullback in this currency pair. But we could be building a little bit of a consolidation in a coil that could, if with the given impetus or catalyst, could break out of this larger formation. Now, if it does break out of that larger formation, and if you look on a monthly chart, there could be some serious upside to this pair. So definitely something to keep your eyes on out. If we do get a surprise out of the BOJ, which I don't think anyone in the market is expecting, I would highly expect for this to be very explosive to the upside. On the contrary, if we don't, we could see a little bit more profit taking in this pair. Obviously, we had a very, very fast run up in Q3 2014 and Q4 2014. You've seen a very, very rapid move to the upside, from around this $100 mark all the way up to about 120. even higher, about 122. So something definitely keeping worth keeping your eyes on this week if we do get a surprise. Um, Looking forward at the BOE minutes, I think there will be a bit of scrutiny in the market regarding this, especially as we've had a lot of weaker data out of the UK. So the UK CPI actually came in at 0.5% year on year, which is a lot lower than its target at 2%. Now, obviously, Carney is going to have to write a letter now to Osborne, basically explaining why it's so far away from their inflation target of 2%. And that's not being published, for those of you who don't know, it's being published on the 18th of February alongside the next MPC meeting. So it won't be at this or anywhere now in the near future. So we could get a few comments out of that, but obviously that is next month. The current vote structure is a 7-2 for a rate hike, so two people actually wanting a rate hike right now. Now, if we do get a 9-0, just because of the current, weaker outlook and data, will be a surprise. Not, as much a surprise. I think if we do get a 6-3. Now, if we did get a 6-3, I think there'd be a higher risk reward. The market's kind of been pricing in a lot of the weaker sentiment, weaker data. If we take a look here at the market structure for the cable, the GBP USD, you can see that on a longer time frame. And if I just make this a little bit smaller for you guys, so you can see the time scale. This is going all the way back to '08 on a weekly chart, and we had this very, very big price structure in here, which we broke out in about Q4 2013, early 2014. We broke out to the upside, and it just looked like, clear sailing to the upside. We actually did get a bit of selling pressure on 172 handle, and since then we've actually just really been selling off quite aggressively. Now what you can see is, and if I zoom in a little bit more to this chart, we've built in a pretty nice little flag formation in there. And we've broken out to the downside, and we've actually broken out to the other side of the larger price formation. So at the minute, if this doesn't keep popping out, you can see there's an inside weekly candle within this other candle right in here. And what's nice about that is actually holding outside of this larger price range or consolidation on a larger time frame. So really what I'm trying to say is, if we actually do get possibly an 8-1, 8-1 not as much, but a 9-0, then I really do think we could see this currency pair speed up to the downside. That would be quite a dovish indication to the market. On the contrary, if we do get a 6-3, which is unexpected, and we do pop back up into this price formation, I would be expecting some consolidating, maybe some profit taking, some rapid profit taking back inside this pattern. So something to keep your eye on, something to keep as part of your plan on Wednesday. On Thursday, we have obviously the biggest event of the week, and I think where everyone should be really holding their chips for. It'll be ECB's rate decision and press conference. Obviously, rates, they're really not going to be moving, so everyone's just really keeping their eye on the press conference. Now, the wide expectation is for a QE package to be announced on Thursday. There are various talks on how they can execute this or what they could do, so that they've been looking at a so-called capital key based on how much capital each country has at the ECB. I don't know about the specifics about that, but there's various little ways they could do, possibly which country has the largest debt market. And then there's been something more recent this week, a talk of possibly the national central banks buying or monetizing the debt of their own country, and they'd possibly put a cap of between 20 and 25% on that. Now, whatever the case may be, the market doesn't really care how they do this, as long as it doesn't affect the size. So really the size is what everyone's looking at. The important factor is really how much are they going to do. Now, we know that their aim and their expectations is to get their balance sheet back up to the levels of 2012, which was about 3 trillion. Now, current levels, that means that they'd have to add another 1 trillion euros to their balance sheet. There has been rumor for about 500 billion figure in reports. I think the market just would think that's just clearly not enough, because from what they're expecting right now, with the current programs already in place, the TLTROs and the ABS buying, it still wouldn't reach anywhere near where they want to get. So I think it's really on how big it is. I don't expect for them to actually mention a figure. If they do announce it, they might announce it and then give details at further at subsequent meetings. But nonetheless, I think that's really what the market's going to be looking at, and really where it's going to be taking its hint on whether it's higher or less than. That's really where we can, at least as traders, seek to be making the highest bang for buck. If we look at some of the market structures and look at the Bund, I think the Bund's probably going to be the least volatile we've seen out of all, at least from what we've seen so far. Maybe things change on this decision. Obviously, we've had a massive rally in the Bund 2014. If we take a look at this price chart, just zoom it out a little bit. Obviously, you see we've just been ripping up the page very, very swiftly. Beginning of the year, you can see right in here, just below the 156 mark. That's where we opened for the year. Now that, for me, no matter what the decision is and how things turn out, I'm going to be looking at this area very, very keenly. Obviously, it's the start of the year. That's where we opened open price. Now that's a benchmark or a reference point for larger time frame investors. If we do breach below here for whatever reason, obviously you can see I've drawn a little bit of a trend line in here, which we seem to be holding. And on Friday we posted a bit of a bearish candle to the downside. Not to say we haven't posted bearish candles before, which we completely wipe out, but it's good to keep a reference on how it affects this kind of trend, this trend line. Maybe if we do start getting an offer below here, we could potentially make our way back down to this 156 mark. Something to keep your eye on. Obviously, if they do announce a QE package, we've seen obviously risk-on effects. The Bunds haven't necessarily rallied on it. In fact, I think probably 7 or 8 times out of 10 we've saw almost an immediate sell-off. So I would personally expect, if they do announce a large-scale asset purchasing, bond purchasing program, possibly on the reflationary expectations, we could see a very high bid to start with, but I could expect, in the next between half an hour to 2-3 hours, we could see a very large offer to come in from larger pension funds, mutual funds, expecting more inflation. Now that's really down to the larger time frame investor. For those that are trading on an intraday basis, you just have to be watching a price ladder and really soaking in how the market's taking that kind of information. Looking now very quickly at the Euro stocks. The Euro stocks 50. Now, if I just zoom out of that just real quick, you can see here on a daily chart, recently we've been kind of coiling in this little region. We haven't really been able to get out of this about 31.34 to 31.46 area in here. So we had this very sharp move down on the S&B, decision to remove the cap. So it was a pretty quick and swift risk-off move. It was caught all the way back up. Some market participants probably betting that the S&B knew something, that the QE is right around the corner. And we saw a pretty sharp bid. Now, if you see up in here, we have the recent highs, not the all-time highs. The all-time highs are way higher in the 4,000s. So the recent highs at 32.76 and 32.85 for this contract. So I'd say if we do get a decision, I would be expecting this market, to find a bit above here. And if it does, and can sustain it above here, we could see, substantial moves to the upside. On the contrary, if the market is disappointed and we do re-enter this kind of price pattern in here, I would be expecting a very swift move right back down into the lower region of this price pattern, possibly pierce. And if it does pierce, I would expect a very, very aggressive offer. And that's all, that really all comes down to the day and the price action as the day and as it really unfolds. Looking very quickly at the euro dollar. This is the euro dollar on a daily time frame. As you can see, going back to October and November, we're building a bit of a coiling consolidation or pennant price pattern. We had broken to the upside, false broke to the upside, as I should say, then broke right back inside, swiftly moved to the other side of it, and we've broken. And on the beginning of the year, we've actually opened with a gap and proceeded to sell off even further to the down. So we've posted a low at 114.67 now in the futures. So the way it stands right now, I'd say there's a lot of hedge funds, a lot of money already short this currency pair. If we do get a decision out of the ECB to ease and do a lot, a large-scale QE program, I would expect a very sharp move to the downside initially, but I would also expect, maybe not expect, but be looking for a very aggressive bid back up to the upside. Now, why would I say that? Because I think there's so many larger time frame investors already on this trade, on the final fact that QE is coming, which I think at this point everyone's expecting. Once the fact is out of the way, the rumor has been QE for, you know, a year now. So I think once the fact actually gets out of the way, we could actually see a very aggressive bid. Now the confluence levels, I think, where we could possibly sell off again if we do have, quick relief rally. We've got this, obviously, a lot of confluence in this region here, these two trend lines, and a very large gap. So that would be an inflection point. If we do find a bid above here and actually start trading above here, that would actually enter a much larger time frame pattern that I don't have up at the minute. But if you take a look on a monthly chart, you will see a very large topping pattern. If we re-enter that, I'd expect a larger bid. I wouldn't be expecting it, but it's something to look out for. That's the euro dollar. On Friday, obviously, little more quiet than the other days. Our data points are HSBC China PMI manufacturing. Again, I would be looking at copper and the Aussie dollar, and obviously risk markets if we do get a much lower reading on that. With the European PMI manufacturing, won't be as relevant after and if the ECB does a decision on QE. And of course UK retail sales, and we close off the week with Bund Bobble Schatz options expiry. Now, the last and final thing that I want to go through, and I think I'll try and do for every week, just very quickly, just something very quick, to give you guys an idea of what I would do in my risk plan. So I just put in, which I can't bring up at the moment for some reason because of the aspect ratio, which is a shame. Anyway, so what I was trying to do here, the risk and money management plan, is per day look at the event-driven risks and the relevance that each one has. Now, for Monday, I have obviously 0 event-driven risks, very low relevance. Your weekly risk allocation, or what I would perceive, and obviously this will go from person to person, depends. Maybe someone doesn't want to trade the ECB or the BOE and just give themselves more risk on a day like Monday, but that's personal preference. Now, in my opinion, I think you should probably be risking about 5% of your weekly risk, whatever that risk may be, whether it's 2 grand, 5 grand, 10 grand, whatever it is. I would say about 5% allocated to that. Tuesday, 3 event-driven risks. The relevance is about medium. It's about 10% of your risk allocation. On Wednesday, we have 3 with the BOJ, BOE, and I think some numbers. Obviously, a higher relevance to that. If there is some decisions, I'd give about 20%. And I've allocated Thursday. Obviously, we have 3. You can't see. It's just below the screen. For some reason, I can't bring that up, which is a little bit frustrating. In fact, if I just try and do this, you guys should be able to see it lower down in here. Yes. So yeah, Thursday, 4 risk events, high relevance. I'd be putting 50% of my capital, in my opinion, on your Thursday. And Friday, 4 event-driven risk, irrelevance about medium, and probably looking about 15% of your capital. So yeah, thank you very much for listening. That was my weekly trading roadmap for the 18th of January 2015. Happy trading for you guys this week, and I hope you guys do very well. Good luck and take care.